Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go.
Hi, everyone. Today's Wednesday, June the 18th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Yesterday was a bit of a marathon. Started the day at 3:30, went to bed at 11. But I did get a good night of sleep, and so I'm excited about taking a look at the day. Let's start with the E-mini S&P. We've been pretty quiet overnight. Let's talk about what these formations are saying. First, let's take a look at the opening range. The opening range low, 6,018. We have not broken it yet. The opening range high, 6,035.75. We have broken that, and as a matter of fact, 2 hours ago, we retested it and are bouncing. So, what do we have ahead today? We've got the presser event, but that might just be noise based on really all the swirling that's going on. Geopolitically, there are a lot of balls in the air right now, and so we've got to be very cognizant of that and realize the types of patterns that we are trading here are really range-based patterns, and they are usually defined by a flat moving average. We noticed that yesterday, coming into the early part of the morning, the moving average was flat. We had no slope. We have our Williams percent R and our momentum kind of low. We did not break down though, because remember, trend, master and commander. Trend is always master and commander. And so big bounces out and big fades down in this kind of environment will bring us reflexive action to the upside. Now, you'll notice 2 days prior to that, what day is today? Okay, so this would have been Friday. Yes, Friday and Monday. Notice, ultimately, that Friday and Monday pattern, also sideways. Bottom of a wider range into the top of that wider range. So you can see that big positioning is still caught in a grind between this area. And so that's what we're still staring down. We'll know this environment changes when we get to these edges and don't see a reflexive move back into the range. Until that time, we probably could expect it. But again, if you say, hey, I expect this to lose 6,100 and you get to here, you don't really want 30 points of risk in an ES managing a prop account like we have at TopStep. So you have to wait for it to confirm and then break down. Everybody wants to be a hero, catching the top. You can pat yourself on the back. You look great, chat amongst your friends. That's not what's going to keep you a good trader over the long haul. It is watching for the patterns that tell you what is going to happen. All right. Volatility has compressed. I find that to be very interesting. So volatility compressing just a little bit, not a ton, but enough to go, So low of the expected move from the option chains, 5,983. High from the expected move on the option chain, 6,081. If you want to take a look at what Mentor Q is saying for the day, the second most important space, besides, the call wall, is this GEX level right here at 60.51. And it's the very level that we watched yesterday for price action to potentially hold in that zone. Okay, so now that we have that, that's what we're looking at. Trend, overall flat, VWAP up, but in a sideways formation. So the traders are trying to get traction. Garbage. I'm looking for deep spikes to the downside or big spikes to the upside to position a trade and watch my risk. Everything else is going to be a scalp event. All right? And unless you're very good at scalping, you better be careful on a day like today. It can get pretty messy. Last thing I want to tell you is the highest volume candlestick of the prior day came at 3 p.m. Eastern Time, and we're still sitting in that box. Let's go to the NQ. Man, I took a long time there. I'm going to race through these because I did add nat gas. That thing is on fire. and it moves in 10,000ths of a penny. So a lot of opportunity there. Let's take a look at the NQ, opening range on the NQ. The low of the opening range, 21,863. We did not break it, still holding it. The high of the opening range, 21,940. We did just stage a pullback, but held that low. So if these moving averages didn't look so terrible, that would be a long bounce, right? And so it would tell us, hey, I got some movement up into this zone and beyond. But right here, it's a mosh pit. So how do you want to trade that? Well, you can see it's a range. So if you collapse into your 5-minute, you could potentially buy the low as it comes in at 950, 21,950, and sell the high at 22,050, right? If it breaks above 22,077, you're toast. It's moving all the way up to that, and don't leverage in. This is not the kind of day to do that. Notice we're still making higher lows. We don't want to do any shorting up here and adding to the shorts. If you're going to short, wait for the break of structure that tells you price action is going to continue in that direction. Yeah, you won't feel like a hero because you lost the top of the range where you could have had X many points. Who cares? What you're looking for is the probability that you'll be right time after time after time after time. All right, low of the expected move today, 21,732. High of the expected move today, 22,223. Again, in this just disaster of price action. I'm looking for the deep edges to go long and the spikes to go short, waiting for them to confirm. So might be sitting on our hands for quite a bit. Listen, take up doing something zany, like reading or something. Don't be overactive here in your chart. Just don't do it. All right, let's take a look at the YM. Opening range, low, 42,424. Wow, that's a lot of fours. Opening range high, 42,544. We held the low. We broke through the high. We came back, retested the low, the opening range high, and are bouncing. Now, listen, to me, the YM is the only one here that looks like a short. That being said, the highest volume candlestick of the day is a long candle that occurred at the 9 a.m. hour, Eastern Time. So what's that tell you? Well, there's some buyers in here that are very keen on recovering this edge. Could you take a long here? Yeah, you could. Momentum is in the upper part of the quadrant. Williams percent R is in the upper part of the quadrant. Yes, you can do it. What's your risk? The low of the opening range. You could probably use the midpoint, but you might get wicked out. This could have a pretty solid reflexive move, maybe even into, Monday's VWAP, right? 42,877. You can see the ranges here, very wide in terms of where the option traders are positioning. Let's go to Bitcoin. Bitcoin, trying to stage a bottom, trying to hold it. Yesterday, look at the selling. It just kept climbing and climbing and climbing. The high volume candlestick of recent days is still the candlestick from the 8 o'clock candle on June the 12th. So I'm going to expand that so you can see this thing is still caught in a box, right? Where's the breakout? It's going to be above 106,000. But they're trying to hold this edge. If they can do that, we could potentially have another bounce. Otherwise, my friends, we're back to testing potentially 100,000. So what is trend? Well, it's flat, right? We've got a flat moving average. Here we went all the way up and then retraced every bit of it, but with faster speed. And now we're trying to do it again. Technically speaking, we could use something like a Fibonacci that would say, all right, let's see if we can get to the 50% range. The 50% range looks like where the moving average is sitting. All right, as long as we stay below 106,200, we're caught in this box. What's the VWAP telling us? Sideways, traders trying to get above it. Momentum is mixed. Let's take a look at the opening range. Opening range low, 104,445. Opening range high, 105,050. Now here's the thing. The option traders have the level to the top at 105,450. What they're trying to get back up and over is the weekly measure that came out on Sunday night. That's 105,800. And they are under it right now. So the folks who sold puts at the bottom here, they're sweating. They want to get up over this level. Are we making a higher low? Yes. Could you take a bounce for long at 104,400? Yes, you could. There's a little bit of risk there, so you want to watch your size and let it confirm structure. See, this is confirming structure that tells me we are either going to hold the range from low to high and be able to take a long, or we are going to reject the opening high, the opening range high at this 104,000, I can't remember what it is, 104,930. Is that right? Yeah. And that will give us a short. So if I can build a trade that says I can do this or this, and it's sitting exactly in the same range, that's a coin toss trade, and that's what we'll be staring down here. I don't really love the coin toss, so I'm going to wait for the edges, and I'm going to trade those edges. Now, that being said, if you're thinking to yourself, hey, I'm going to trade the edges because I think it's going to sit in a range, if it breaks the edge, don't say to yourself, well, I just got in too early, I'm going to take it short again. Stick in the direction of trend. That's going to be your best pal. Okay? That's what I would recommend. Very tight compressions there. I don't know who's pricing in that volatility, who's trading there, but good grief. Not too hot. All right, let's take a look at copper. Copper had a very tight structure in the opening range. Opening range low of copper, $4.7845. High, 4.7945. So 100 ticks. All right, that's nothing to sneeze at here, right? This great trading space. What's it doing right now? It's at the top of a range, top of a high volume candlestick formation from what date? Let's do this. June 11. We're still there. What have we done every single time in, let's see, 1, 2, 3, 4 days? Here we are. Could this be a short? Absolutely. But you better reject quickly or this one's going to eat your lunch and it's going to move all the way up. 4.80 is a very good level for this chart to bounce. And if they hold this inverted head and shoulders pattern, the move to the upside is very likely to give us Fibonacci extension that goes to 489 and then 492. Upper edge of the expected move, 4.93. Lower edge of the expected move, 4.63 and some change. All right, let's go to nat gas because it's been a heater. Let me make sure oops, wrong one. That is the forward contract. This thing has been scorching to the upside. For those of us trading Boyle, it's been lovely, right? That's a triple leveraged ETF. I don't want to scare anybody into that thing, but I certainly love it. So what are we staring down? Look at this range. Very big formation overall. And what are they trying to do? Break out of it. Now, this chart's not called Widowmaker for nothing. So what you want to do is be very careful. You want maybe trade a micro, but we have a very high marker on the percent R, and we also have negative divergence on the stochastic. So this bounce up is likely to give us some action. Let's look at the opening range. Low of the opening range, 385. High of the opening range, 3.88, right? So we're looking at about, 40 ticks or so coming up into the edge. It broke below it and it broke above it. That's pretty sideways to me. We could see a megaphone pattern in this formation. Hard to say, but with negative divergence, I'd let the blow off top come, and we'll have ourselves a beautiful trade here. Low of the expected move, 3.77. High of the expected move, 3.95. Nat gas is going to move with energies as geopolitical unrest occurs, and all things dramatic follow us. All right, let's jump to oil. Last night, I was on Slow Markets. Dakota is with the Top Step team and in Chicago. And so I got to do Slow Markets, which was fantastic. I actually loved it. Had a few people whining about why we weren't trading the NQ. But outside of that, here we have a look at oil. And in this space, I said, listen, the dip is likely a buy zone. I was looking for about 40 ticks. But I waited with this chart for over an hour and it did not move. So I clipped it off at a pretty nice profit. But outside of that, things went pretty well. I would have liked to have shorted it because my thought was, hey, I want to short this thing. But a lot of people are just freaked out. I think it's short sellers doing this, folks. All the things that we have been listening about for oil, a lot of these technical systems just went net short because they felt like the market was going into recession and they believe all the media hype and everybody talking about oil getting pushed onto the market. These guys are caught flat-footed. All right, that's my soapbox. I'm getting off of it right now. We're done. Okay, don't fret, folks. Just read the charts. Don't listen to the media other than to roll your eyes. I'm just saying. All right, opening range low. Fred, what are you doing here? Opening range low for oil, $73.34. Opening range high, $74.04. We never broke the high. All night long, never broke the high. And as a matter of fact, we made a high, a low, a lower high, a lower low, and now we are back inside of the opening range box. So, what does trend tell us? Well, it's up. So dips are buy zones. Dips are buy zones. Now, what do we have above us? We've got a weekly expected boundary, $74.20, and then this one, the volatility has really expanded. They've got oil positioned up for a high at $76.09. You know, color me crazy. I don't see it happening. And if it does, we're going to see one of these wicks. Now, that being said, that candlestick here doesn't even have the most volume for prior days, right? So we are sitting in formations where I don't see anything but short covering, folks. I really don't. I think that the oil traders are caught off sides and the dips are still bringing buys. So it is trending up, but you better take profit at resistance. And please, please, please do not buy a new high. I think it would be the wrong thing to do. All right, that's just me. Okay, we got the low end of the opening range. We've got the high end of the opening range. We're back in there. Listen, the VWAP is down, but we're above it. Moving averages, momentum, all of that says above. Does it tell us we can actually buy 73.51? Maybe. Your risk would have to be at least 50 cents wide. I would try a micro. If you're trying to do that, there's just too much risk here, right? Look at the range. Look at the box. It's a mess. It's a mess, right? Right in the box. If I were to take a trade, it would be at the high near 74.20 and I'd be looking to short it. Maybe this wick up here at 74.60 actually gives us a line to watch. We'll see. All right. Low of the expected move, $71.93. High of the expected move, $76.09. Let's go to gold. Also something I think is that's going to fade. That being said, caught very much in a range last night. Opening range low, 3,407. Opening range high, 3,414. So what do we got? A 7-point range. It breaks the bottom and the top. Garbage. Okay. Now, so what we want to look for is the highest volume candlestick of prior days. Guess what it is? It's bearish. It's a bearish candlestick. Now, buyers did come in. But once again, what this chart is in is a big box of noise. So where's the trade? Deep on the bottom, that's a buy zone. I see the expected move as 3,386 on the bottom. Expected move on the top, 3,428. To me, what do we have? A flat moving average that's sort of, it came from up and now it's down. Look at this, folks. I mean, we need to look at it on a 4-hour chart. Look, see that? Buy the low and take profit up near that 34.24, right? If you buy the low, your risk is very small, right? You can have like a 5-point risk, which is not super small in terms of gold itself. So you want to trade something like a micro, but it's caught. And you can see the 4-hour formation really showing inventory accumulation. So they're going to either distribute or liquidate, right? Distribute at a profit, distribute at a discount. And it's going to send us back into this range. Are we grinding to the north? Yes, but look at the bigger pattern. See this breakaway formation? We could easily fall back into this trend line. And I really suck at trend lines, to be very honest. So take that with a grain of salt. But I do like this line here at 33.86. I think that's where gold goes for now, but it's going to get picked up, folks. Central banks continue to buy it. All right. Man, how long have I been talking? SPY. Opening range low. $599.32. Opening range high, $600.05. What? No. High, $599.47. Low, $598.76. That's a 4 a.m. open. What did we do? We bounced above it and below it. What is trend? Flat to down, but it's coming from an up space, telling us that we're in this wide pocket. Expected move to the downside, $594.11. Expected move to the upside, $604.20. You want to be careful here. There's a gap. They tried to fill it. I say it's hands off. I mean, I don't like what's going on in these charts at all. The high candlestick, the high volume candlestick from days past, test the top of this box. We bounced out through it. So if we can breach 600, there could be a ride that you could take long into 601.50, 602.50. That looks terrible. Okay, let's take a look finally at the QQQs. Opening range low, $530.40. Opening range high, $531.15. Look at these candlesticks. Now, interestingly enough, this actually is a good trade formation because it's so clean, right? The buy zone at $529.22, ideal. Jobless claim is going to be coming in 1 minute. If it breaks that edge and recovers, you've got yourself long. If it breaks this edge and fails, you've got yourself a short into the base of the range, right? Very organized pattern. Opening range, expected move low, $525.60. Expected range high, $535.48. I promise I'm not going to add any more instruments, good grief, but nat gas is really taking off. And man, am I loving trading it. All right, everyone, take care. I'll see you on the streams.